Good morning, everyone, and welcome back to another segment of your Daily 5. I'm Leslie Jouflas. My website is Trading Live Online, and I'd like to thank StockCharts.com for inviting me back. I'd like to mention that I'll be doing a presentation on December 9th at 12 p.m. Eastern Time for the Chartered Market Technicians Association, and the topic is using pattern recognition in contraction and expansion phases. So there'll be a link at the bottom of this video that you can sign up. So I hope you can join me for that. But today we're going to be taking a look at some patterns that are forming in the S&P 500, the Dow Jones, and the Nasdaq. The Dow Jones has recently made new all-time highs. It took it a little while to get there after the S&P 500 and the Nasdaq. But right now, I've got these graphs up of, there's a fear and greed index that you can find right down here. I put this link in for you if you want to go look it up. They have a total of 7 fear and greed indicators. And this one that we see on the left side is usually at the top. And it's a quick glance at sort of the temperature of the market. You can see right now we're getting into extreme greed. Now, this is not a timing tool, not by any means, but it is a good gauge to just take a quick glance and kind of see where you are. And I use it in conjunction with patterns. On the right side, this is from Stock Charts, and it's a seasonality chart of the SPX. And if you just type in the symbol $SPX on Stock Charts, that chart will come up, and then you can scroll down to the bottom and choose seasonality. I have this on 20 years, and we can see that December closes higher than it opened in this 20-year period 68% of the time. So it's sort of the scarecrow in the Wizard of Oz pointing, which direction to go. So we have a seasonality of bullishness, but we're also getting towards an kind of a overbought market, and I'm starting to see some big patterns forming that are reversal patterns. Now, in previous segments, on September 23rd with David Keller on his final bar, I presented a broadening top pattern, a monthly pattern, and you can go back and look that segment up and check that chart out. But now we're at the upper trend line of that. It's very difficult to just come up with a price point on a pattern like that. But now with these daily patterns and being up towards that upper trend line, I'm starting to see some confluence if we come up and make new highs up around just above the 3,700 area in the S&P up to about the 3,800 area. So let's walk through this chart real quick and I'll show you how I'm getting those numbers. Let's start on the left side, the February 2020 highs. And I'm taking the length of the high down to the March lows and extending it using a 1.27 Fibonacci extension ratio. That's bringing it up to 3725. Now this pattern right over here, this is called a butterfly pattern. This is a sell pattern. And this is the starting point of the pattern. It has a swing down, and then there's an A, a B, a C, and a D that extends above that starting point. Well, when the market made a new high right here, the market found resistance at that 127 extension. That's of here to here, extending 1.27 up of the length of the swing. And we came all the way back down to where this upside breakout was. Now this candle being a shooting star, this has to be validated by a close below this candle, which we have not gotten. I've got a little red arrow right there. There's also extensions to this pattern. So if the S&P were to come up above this 3668 high, then there's some extensions up here, 3777 area, and even just around that 3,800. So I'm starting to see a clustering of numbers, above these highs. Now here, let's take a look at the RSI real quick. I've got a range kind of marked in here, and the RSI is starting to just sort of go sideways. So if we do make those new highs, I want to be watching this RSI to see if it is showing strength by continuing up, or if it starts to show some divergences. And also the on-balance volume down here, I've got a little trend line in, which may be helpful in conjunction with the RSI and with some price highs. So let's move on to the next chart. I want to show you a little bit of a detail of this section. So we're still on the S&P 500. This is a futures chart. So here's that same pattern. This has some parallel trend lines here. In the center of this trend line, these extensions of the pattern that I just showed you, the A, B, C, D, the D extending up towards the 1618, that 37, 74, 75-ish area, we're not looking for an exact number, just a zone, is coming in right around this center trend line. Now there's a little pattern here, A, B, C, D. And again, if we extend above this previous high, I just moved that over so we can see it more clearly. We can see where those extension numbers are. And again, we're getting up towards the 3,700 and the mid 3,700s. So starting to see a lot of clustering of numbers. Now, when markets are at new all-time highs, certainly I don't want to just jump in there and set an order in there. I want to watch to see what the price does, how the price reacts to these levels, and also how the other indexes are reacting to those levels. If there's going to be a significant move to the downside, any direction, up or down, it's best to see the indexes moving in tandem. And so I'll be watching, the Nasdaq and the Dow to see if that occurs as well. Any pattern can fail. So that's why it's important to learn how to monitor and also learn entry techniques where you can control the risk, most important. So the NASDAQ now also showing a similar pattern. This is the butterfly pattern. We have our starting point, swing down, then an A, B, C, D that extends above that X point. So this is just showing you where some of these areas are coming in, just like we just looked at on the S&P. When the markets are at new highs, all-time highs, there's no resistance point yet. And so we want to wait and let the market, tell us that that is a turning point or is continuing to the upside if they do make highs. So here on the RSI of the NASDAQ, again, similar to the S&P, making a range here. The on-balance volume on the NASDAQ has not been as strong recently as it has been on the S&P and the Dow Jones. And so we want to keep a close eye on that as well. If the prices in the NASDAQ turned down over a couple of day periods, start breaking support areas, then we want to watch to see if this RSI breaks this support area as well. So now if you want to learn more about these patterns, please just come to my website. Right on the homepage, you'll find a course there that goes into great detail about these patterns. So here, let's take a look at the Dow Jones Industrial. Now the Dow does not have a butterfly pattern like the NASDAQ and S&P are showing, but it does have extension patterns. And you can see right here, using this high all the way down to this low, up here, we have that 127 where it's found some resistance. It's forming this sort of A, B, C, D pattern currently. Almost got to that, just missed it, but more extensions up here as well. So you might want to just take some notes, excuse me, of these price areas. And if the markets make new highs, let's see what happens around them. Okay, so now on the Dow, what we want to be watching is these areas here where I have mapped out in the pink dash lines, previous February 2020 highs. Do we hold that, or do we start to come down to some of these other support areas, previous gap area, down into this big gap area right here? This is the gap where the market then went up to new highs. So we definitely want to be watching that. Well, I'll be updating these charts on the next segment, December 10th, on our daily 5. And so we'll be following these patterns really closely. Thanks for joining me today, and I hope everybody has a great week.